Okay, let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we analyze the markets, how BTA look at the markets, but nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top. But we will make a lot of money in the middle. Okay. Let's do an analysis of the major market indexes. Okay, the actual indexes themselves. And I call this walking with the market. Okay? I try to stay in step with the market. I don't try to anticipate what's going to happen. I try to analyze what's the highest probability of something happening. But what I really want to do is stay in step with the market. If the market is going up, I want to be long. If the market is going down, I either want to be short the market or sitting on the sidelines. Okay, so let's try to walk with the markets. So here, we're going to look at the Dow Jones. All right. This is a daily chart of the Dow Jones. And as you can see, I'm going to maximize it a little bit so you can see it. Okay. Notice that we are now kind of moving sideways. Okay. Right around key resistance areas. Okay. Right around key resistance areas. Notice this horizontal yellow line. That's at 33,150. And we have this red horizontal resistance level, this red horizontal line, that's right around 32,900. Okay, notice that we're moving sideways right at these horizontal resistance levels. So this is an area where the market is having some difficulty trying to get above. Okay, the Dow Jones. This is the daily chart of the Dow Jones Industrial. So this is the area where the Dow Jones is having some difficulty. So we're coming right to this area here, and we're starting to stall and move sideways. Okay, so for the last 1, 2, 3, 4, 5 trading days, actually last week, we've been moving sideways. So we got to try to get above these horizontal resistance levels. If we can't make it above these levels, then maybe the market is going to come back to around the 32,000 level. Okay, maybe it's going to move up, move sideways. It can't break through it and start making its way back down. Okay, we start making our way back down to the 32,000 level, break below that. Well, who knows? We might come back down and test these lows. But what the market is telling us, what the Dow Jones is telling us right now, is that it's a little undecided. It's moving completely sideways. Okay, so we have to be careful of that. All right, so the Dow Jones is in a sideways channel, a kind of a sideways movement right now. Okay, we have to see what's going to happen from here. Hopefully, it could break above this and catch the momentum. But if it doesn't, and it start getting rejected, and we break below this level right here, okay, the lower the channel. If we break below the lower the channel, then it's a possibility we could come back down to this 32,000 level. Okay, so the level I'll be watching on the Dow Jones right now is the low of this channel right here. Okay, the high and the low of this channel. So in other words, I will put a trend line across this high right here. Right. Let's say right here. I'll put a line across these highs. And then I will put another one across the lows. All right. I'll put another one right across the lows here. Okay. Right across these lows. And that's where I'll be watching right here. If we get below, say 32,500, I would think it's going to be a problem. Maybe it might come back down to the 32,000 level. If we get above 32,272, then maybe it might come back up to this next overhead resistance area right here, next horizontal line, right around 33,600. So that's what I'm looking at. The break above this high, a break above this low, come outside of this channel. If we could get above this high right here, okay, then that's really strong. That's really strong movement. That could be a sign that maybe the market wants to move upward because it got above this long-term weekly trend line right here. Horizontal line resistance level right here, and then it got above this daily fractal resistance level right here. So if we could get above this high, then that could be very positive. Maybe we could break out of this box and start heading up a little bit. So that's the Dow Jones. Now let's take a look at the Nasdaq. Okay, let's take a look at let's go to the Standard & Poor's first. Let's take a look at the Standard & Poor's. Let's see what the Standard & Poor's is trying to tell us. Okay, let me go back to the Dow Jones for a minute here. We want to let's minimize the Dow Jones so we can maximize the Standard & Poor's and zoom in on it, see what the price is looking like. What the price action is telling us now. Okay, so for the Dow Jones, we got some similar action, but we don't have that weekly horizontal line right here on this chart. But what we do have is this daily horizontal resistance level right here, this fractal line right here. This is on the fractal going back sometime earlier this year. Okay, so we still are moving sideways. Okay, we still had this sideways movement, and as you can see, that little green line to the right of this bar, okay, this is a daily chart of the Standard & Poor's, by the way. This is a daily chart of the Standard & Poor's. That little green line to the right of this trading bar right here, this daily bar, is the close. We close almost right on this horizontal resistance level, almost right on it, okay? So we closed at 4,180 on the Standard & Poor's. This horizontal resistance level is 4,110. Okay, so we closed at somewhere around $2 below this overhead resistance level, and it's moving sideways right here. So the same thing for the Standard & Poor's we said for the Dow Jones. I will look for a break, okay, above this channel. Okay, we inside of a channel for about 5 trading days, right? So I will look for a break above this channel to give me an idea of what may happen here. So I will look for a break above. Actually, this trading day right here is giving us the highs and almost the lows, if you notice. So I would look for either a break above. This was Thursday's action. Actually, this is on the 2nd, okay, June the 2nd. I would look for a break above that 4,177, or a break below 4,074. Okay, so that's what I'll be looking for. So basically, you can just take a line. If you just snap a line right across here and snap a line right across this level right here, that's what you're looking for. So we want to see if we could get a break above. If we could get a break above or below these levels, and try to get an idea. Okay, give us an idea of where the market may be trying to go from there. All right, but if you notice, okay, this is key. If we break above this level right here, if we break above Thursday's high, then we may come up to here, which is 4,200 before we 4,238 before we find a little area of interest. And then this next fractal right here, we have this here fractal right here, these two fractals at this horizontal resistance level is at 4,300. Okay, so maybe if we can break out of this sideways movement right here, we can go to 4,238 and then go up to 4,300. Now, something I forgot to mention about the Dow Jones, right? I'm going to take these here. I'm going to take these lines off. So you can see this here kind of easily. So what I forgot to mention about the Dow Jones, but I want to mention it now on the Standard & Poor's. If you notice, this day was an inside day. Okay, this day was an inside day. Okay, and it was a down day on the inside day. So notice that why I call it an inside day, just so you could have some clarity. The high of the day before and the low of the day before is higher than the high of Friday and the low of Friday. So it's inside of this day's action. That's what an inside day is. Okay, so it's inside the prior day's trading action. Okay, so here's the high from Thursday. Here's the low from Thursday. Notice the high from Friday and the low from Friday is inside the high and the low of the day before. So that's called an inside day. That's a day of indecision. That's a day when the market is not really sure which direction it wants to go in. It's a day of indecision. All right. So we have to see which way the market wants to go from here. If it breaks below this the day before's trading range, if it breaks below it, then it's a possibility it may come back down, like I said, to this weekly horizontal area here, which was prior resistance. Now we wanted to act as support. It's a possibility it could come back down to here. If it break above it, then maybe it could go to the next area of interest around 4,200. But then the next area at 4,300 is really a really key area because you have two prior fractals over here. Okay, two prior fractals right here. So that is a really key area of interest at 4,300. So we got to see which way this market is, which way the Standard & Poor's is going to break from here. That'll be the key. All right, which way is going to break from here? So you want to stay in step with the market. That's why I said let's walk with the market. Okay, that's why I call it walking with the market. You want to stay in step with the market. You do not want to get out of step with the market, because the man who taught me how to trade, he used to always say that the major market, the direction of major market is the most important thing. Okay, if you could get that right, then you got more than half the battle won already. Okay, so we went back to the Dow Jones again. So here's the high of Thursday and here's the low of Thursday, right? So notice Friday's action is inside the high and inside the low. Okay, it's lower than Thursday's high and it's higher than Thursday's low. It's an inside day. Okay, today's trading range is caught inside of the trading range of the day before. That's an inside day. Okay, so that's a day of indecision. That's a day where, the market is not sure which direction it wants to go in. Okay, so but it's been sideways all week. Okay, so it's telling us not only did that day not really know which direction the market want to go, but all week the market is not really sure which direction it really wants to trade in. Okay, so remember now, Wednesday we had a outside day. Okay, and it was a bearish outside day. I warned y'all of that on Wednesday. Okay, that we had a bearish outside day, and that's not really it's bearish. It's not bullish. That's saying that it's a possibility that the market may move lower. Then on Thursday we had a really strong update. It found resistance right around the 21-day moving average and lowest, and it bounced. But that bounce was on very low volume, and I warned y'all of that the volume was very low. It's not convincing. Okay. And then now Friday we have an inside day. So look, this market may be losing a little momentum to the upside. Lowest is still below price on the daily charts, and we're going to look at that later on. Lowest is still below price, so the upswing is still in play. Okay, because lowest is still below price. So we have to see which direction this market is going to go in. Now, let's go now and let's look at the QQQs, because we did the Dow Jones. We did the Standard & Poor's. Now let's look at the QQQs, okay, and see what it is saying. All right, so here's the daily chart of, not the QQQs. I apologize. That's the ETF that tracks the Nasdaq. That's the security that we trade in when we want to trade against the Nasdaq or trade with, go long or short the Nasdaq. That's the QQQs. Right now we're looking at the actual indexes themselves, right? The Nasdaq Composite is what we have on the screen now. This is the daily chart of the Nasdaq Composite, the actual ETF. The actual index. I'm sorry, the actual index. All right, not the ETF that we trade. Okay, so the Nasdaq is looking just like the Standard & Poor's 500 index and the Dow Jones index. It's moving sideways for the last week. And just so I don't forget, we did have an inside day. You can see that the action for the Nasdaq was inside of Thursday's trading action, trading range. So we have an inside day on the Nasdaq. But look here. On the Nasdaq, we have a long-term weekly support level right here at 11,946. We have been testing this level all week, and we haven't been able to break through it to the downside. Well, that's good. We got above this downward trending trend line, and now we're moving sideways, okay? But we haven't broken back below this prior resistance, which is now acting as support, and that's a weekly level. We haven't broken below that. So that's good. We're holding support there. We're moving sideways, granted. We haven't gone anywhere over the last 5 days, right? We're moving sideways. We got that pop from last week. We got the follow through day, and then we rallied up. But now we're moving sideways. And we got that trading day on Friday, which was a day of indecision. It was the inside day. Well, the whole week has been a week of indecision. It didn't really decide which way it wants to go in. We had 2 weeks ago, right? We had that follow through day and that move upward. But then last week we moving sideways. So it's the same thing with the Dow Jones. If we break below this weekly level here, with this weekly prior resistance, which is now support at 11,946, we may come down and start testing this trend line here. This trend line was a channel trend line. Prices were stuck in that range, this downward channel for almost two months or something like that. Okay, but now it has broken above it, but it's moving sideways. So can we stay above this weekly support level right now? This is the weekly longer term support level in red, or are we gonna move up and break above this daily resistance level right here at 12,377? So I will be looking for the highs and the lows of Thursday to try to give me an idea. Or I would look for the high of Thursday and the low of this day right here. All right. I will be looking for that. That day is was 527, the low of 527, which is 11,856. So if we break below that, then maybe we're gonna come down and try to test this trend line, this downward trending trend line, and test that as support. Here's the downward trending trend line. We break below this low here, maybe we're gonna come down and test this trend line as support. If we can find support there, maybe it'll bounce. If it breaks below this trend line, okay, and gets back inside the channel, it's a possibility we could come down to the internal trend line of the channel and then start testing these lows from back here, okay? So that's where we at. We have to see how the market is going to trade next week, all right? Are we going to come out of this sideways channel to the upside, or are we going to break down and start coming back down and moving lower, and possibly for the Nasdaq come back within this downward channel and start testing these lows? So the Nasdaq is sitting right on support, okay? That's actually good, okay? The Nasdaq is sitting on support, but if we go back to the Dow Jones, you can see the Dow Jones was also sitting right kind of on support right here, right? You see this longer term weekly red trend line right here. We just breaking below it and then running back above it, right? But we haven't really stayed below it and closed below it and start moving back down. Only one day we closed below it right here. Okay, so out of 5 days, only one day we closed below it. The very next day, Thursday, we got above it. Well, Friday we actually closed below it also by just a few points. Okay, so basically what I'm trying to say is that we haven't really been able to break below this prior resistance, which is now support, break below this support level and start trading down. So that's good. So the Dow Jones is kind of holding support a little bit, right? And like I said, it's still above lowest, right? So it's holding a little bit. It's moving sideways. So that's kind of good, okay? But it is an area of indecision. So which way is it going to go? Is it finally going to break that support and trade down? So we have a longer term weekly support level for the Dow, a longer term weekly support level for the Nasdaq, and for the Standard & Poor's, It's not a longer term red weekly support level, but we are on this daily support level right here. The yellow line, which is this daily support level at 41.10. So we are holding kind of support, trading sideways, kind of holding some key support levels, but we are moving sideways. So, and we have that inside day. So we got to see which way the market wants to go. So you got to stay in step with the market. You got to stay in tune with the market. You got to walk with it. Okay. You got to walk with it. Don't try to fight it. Walk with it. All right. That's what we do. We walk with it. We ain't trying to fight it. Okay. You can't fight it. So now here is, let's look at our daily charts with our moving averages on there, right? So here we have, this is the Dow Jones, the actual index. Once again, the Dow Jones Industrial Average. And this is our moving averages. This is a daily chart of the Dow Jones with our moving averages. Now, we already looked at the fact that on the structural chart that the prices were moving sideways in the sideways channel. But look at the Dow Jones. It's moving sideways, resistance overhead at the downward trending 50-day moving average. Support below at a downward to sideways moving yellow 21-day moving average. And we got a 9-day uptrending 9-day green. This green line is uptrending 9-day moving average. So for the Dow Jones, we talked about the highs and the lows of the channel. We got to break out of that to give us a little idea which way the market wants to go. We got this inside day, but we have some key moving averages on this chart that I'm telling you, do not overlook this. We got this downward trending 50-day moving average acting as resistance. We got this 21-day moving average trying to act as support with the 9-day moving average acting as support. If we can't get above this 50-day moving average, it is a good chance that we could get resistance at this 50-day moving average. It's a downward trending 50-day moving average. That is very dangerous. So I will not try to go long, okay, until we can get above this 50-day moving average. Okay, we got to close above this thing convincingly, all right, and because this 50-day moving average can act as resistance, you could trade up to this and it could get rejected and collapse. The 21-day moving average, okay, is right below it. The 9 is right below it. Those are key support levels, all right? So right now, we at an area of indecision, but at least we at key resistance and support levels. If we get rejected off the 50-day moving average and come back down and start breaking below the 21-day and breaking below this green line, which is a 9-day moving average, and get below Thursday's low, then I'm thinking that, yeah, we're probably going to start trading down, okay? Because the market is telling you it's moving down. It's breaking below support, key support, 21-day and 9-day moving average, and it got rejected at the 50. Okay, so that's what we're looking at. But if it breaks above the 50, okay, if it breaks above the 50, well, it's a good chance it could come back up to this crayon line, which is the 200-day moving average, a downward trending 200-day moving average. So that's what we're looking at on the Dow Jones. Resistance at the 50, support at the 21 and the 9-day moving average. Keep an eye on that. We're going to be monitoring that all week next week. Every day, we're going to be monitoring this every day. Because if we get above that 50-day and find support, then I'll be a little more interested in going long according to our Bollinger Band strategy. Okay, our weekly Bollinger Band strategy. If we break below the 21-day and the 9-day moving average, okay, break below this key support, that's good that the 21-day and the 9-day is right below price, okay? So if it breaks below that, okay, that key support level, then I'll be thinking that maybe the market is trying to move to the downside, and let's see what it shows us, all right? Now, that's the Dow Jones. Let's look at the Standard & Poor's 500, okay? Let's look at the Standard & Poor's 500. Here is a daily chart of the Standard & Poor's 500. Okay, let me zoom in so you can see it a little better. Okay, now the Standard & Poor's 500 is kind of in the same position, except for the 50-day moving average is a downward trending 50-day moving average, but here's the red line, which is a downward trending 50-day moving average This is a daily chart of the Standard & Poor's 500, the actual index. Okay, here's the 50-day moving average, which is a downward trending. This red line is a downward trending 50-day moving average. Well, as you can see, we're a little bit further away from this 50-day than we was on the Dow Jones. Okay, but it's still a downward trending 50-day moving average. So we had that sideways channel that we talked about already. This Thursday was the high of the channel. So if we break above Thursday's high on this channel, you got to watch out for this 50-day moving average right above head, because then you'll be getting kind of close to it. And if you trade right up to that 50-day moving average, is it going to act as resistance? Because a downward trending 50-day moving average is a really strong overhead resistance level. It is a really strong overhead resistance level. And you can hit that, bump your head, and get rejected. Now you got this downward trending 21-day moving average that we want to see this 21-day moving average start to flatten out and turn up. It's not doing that, okay? So that is not really that great. Now, what we do have here is an uptrending 9-day for the Standard & Poor's 500. Look at that green line. It's an uptrending 9-day moving average. As long as you're closing above the 9-day moving average, then you know you're on the right side of the market, right? The 9-day moving average is going to keep us on the right side of the trade. No ifs, ands, and buts about it. That's what we use the 9-day moving average for, to keep us on the right side of the trade, the right side of the momentum. The 5-day moving average, which is this white line, is our key momentum indicator, right? Key momentum moving average indicator. If you get above that and jump above that, then you know that the momentum is still to the upside because you're closing above the 5-day moving average. If you long and you closing above the 5-day moving average, listen, turn the computer off, take a walk in the park because you're making money, right? Point blank and period, right? So getting above a 5-day moving average, closing above a 5-day moving average, staying above a 5-day moving average is a moneymaker, no doubt about it. If you don't listen, don't believe me. Keep watching the charts and see what the charts tell you, all right? But if you're above the 9-day moving average, at least you're still on the right side of the market if you're long. Okay, so right now we're above the uptrending 9-day moving average. That's good. All right, so basically we want to see if we're going to get above Thursday's high for the Standard & Poor's 500. If we do, we can take a look at the weekly Bollinger Band strategy for the Standard & Poor's. But we got this downward trending 50-day moving average. So we got to be careful of that. That can be a rejection area. So if we were to go long, according to Bollinger Band strategy, we're going to be keeping a really close eye on the possibility that we could get rejected at the 50-day, and we're going to close out very quickly. But now we got this 9-day moving average right below price. If we start breaking below this 9-day moving average and get back below this 21-day, then that's going to be a problem. And we got to keep an eye on lowest at that point and see if we're breaking below lowest. Because right now, lowest is right below price, and that's a good key support also. So for the Standard & Poor's, we're watching the 9 and the 21-day to the downside, the 50-day right above it, okay, acting as resistance. Let's see what happened, all right? And we have that inside day, so we know Friday was a day of indecision. And the volume was low, okay? On all three of the major indexes, the volume was kind of low. On the Dow Jones, also, the volume was below Thursday's volume, okay? So it wasn't a distribution day, so that's good. We had a down day, but the volume wasn't higher than the previous day, so it was no distribution for the Standard & Poor's, which is good because we already had a day of distribution after the follow-through day. So we had the follow-through day, okay, on the 26th. As you can see right here, we had the follow-through day on the 26th. Then we had distribution within 2 days after that. I put up a video and said that the rally had a 50% chance of failure. That's because we had distribution within 2 days of the follow-through day. So with no more distribution, well, we didn't have no distribution on Friday, so that was good. So it's only one strong distribution since the follow-through day, okay? And if you want, we can go back and you can look at the Dow Jones right here, and you can see that we had a down day. We had a down day on Friday, but it was on lower volume than the previous day, so it's no distribution, okay? So now let's look at the Nasdaq and see what that's telling us with the key moving averages, okay? Let's look at the Nasdaq, okay? So we got that 50-day moving average for the Dow Jones overhead for the Standard & Poor's is right there, but this is the Nasdaq is looking more like the Dow Jones. Okay, it's starting to look a little bit more like the Dow Jones. Okay, in other words, we got that 50-day downward trending 50-day moving average is kind of close to price. Not all that close, but it's kind of close. Okay, all right. Here's Thursday's high. The downward 50-day moving average is right above it. We break above Thursday's high, we're going to be right at this red downward trending 50-day moving average. We got this downward trending moving to sideways moving 21-day acting as support. And we got the 9-day, the green line, which is the 9-day moving average, up trending 9-day moving average acting as support also. So that's why I say the Dow Jones and the Nasdaq is looking kind of similar, because we're squeezed in between a downward trending 50 and an upward to sideways 21-day and an uptrending 9-day. Okay, so for the Nasdaq, our trading plan, where we're gonna be looking at the Nasdaq going forward next week, is kind of similar to the way we're gonna be looking at the Dow Jones. Can we stay above? Can we get above? Can we get above this downward trending 50-day moving average and break above it? Or are we going to break below this 21-day moving average key support and the 9-day uptrending 9-day moving average? We're stuck in between price. We got a day of indecision. At least it wasn't distribution. Okay, there was no distribution day on Friday for the Nasdaq either. So that's what we're looking at for next week. What's going to happen here? Are we going to hold support and move up and then get above the 50-day moving average? Or are we going to break support? Or are we going to trade up to the 50? Find resistance and then break down and hit and head through support? That's what we have to see. Lowest is still below price. I can tell you that right now. Lowest is below price on the Nasdaq and all the major indexes. So we didn't break below lowest yet. Okay, we did not break below lowest yet. She's still holding support. So basically, if we break below lowest and break below the 21-day and the 9-day for the Nasdaq and the Dow Jones, well then maybe those indexes want to move to the downside. Okay. Well, if any of them break below lowest, then that might be a clue, a very good clue that prices want to move to the downside. Okay. So now let's look at the last major index. Last major index we want to look at here is the IWM. This is actually the ETF. Okay. This is not the Russell 2000. This is the IWM, the ETF that tracks the Russell 2000. So this is the only ETF that we looked at so far today, all right? But notice, it's looking just like the Dow Jones and the Nasdaq, okay? We got that downward trending 50-day moving average that's right overpriced. We got support at the 21-day, and we got the 9-day, uptrending 9-day moving average that's holding right at support. We moving sideways here. We already saw that the other major indexes were moving sideways. Well, guess what? The Russell 2000, the IWM, has been moving sideways also, but it's right here. Okay, it's right stuck within. It's squeezed between the downward trending 50-day and the sideways to upward trending 21-day and 9-day moving average. Which way is it going to break? We do have an inside day for the Russell for the IWM. I'm sorry, we do have a inside day for the IWM also. Okay, the ETF that tracks the Russell 2000. We got an inside day right here. Okay, so we inside of Thursday's trading range. The highs and the lows for Thursday's trading range. The Friday is inside of that. Okay. The high and the low for Friday is inside of it. We got an inside day. Okay, we got an inside day. Same thing as the other indexes, right? So what we looking at for next week, are we going to get above this downward trending 50-day moving average? Or are we going to break support at the 21-day and the uptrending 9-day moving average? Okay, what's going to happen? Like I said before, though, right now we closing above this 5-day moving average, which is the white line. Okay, so we still closing above this 5-day moving average. We're right on it on Friday, but we're still above it. Well, if you're closing above a 5-day moving average, like I said, you can take a walk in the park and making money. But prices are moving sideways here. Okay, we got that 50-day moving average right overhead. So while you're walking in the park, peek at your phone every now and then. Okay, or put an alert on your phone, because the 50-day is right above it. It could get rejected and it could collapse. Watch the 21-day and the 9-day moving average below, because that can act as support. But if it don't hold the support and it breaks through that, well, maybe the Russell might come back down and test these lows over here. So we got to be careful. We got to watch this. So the 50-day moving average overhead is resistance. We watch it on the Russell, and the 9 and the 21-day moving average, okay, right below it as support is what we're going to be watching for the IWM. So basically, to sum it all up for right now, for part 1 of walking with the market, right? This is part 1. We're gonna do part 2 very shortly. We'll upload part 2 also, so look out for that video. But this is part 1 of walking with the market, right? We can see that for all of the major indexes, we are right on key resistance and key support areas. Okay, we can see that we right on key support and key resistance areas. We have a day of indecision. We got an inside day. We identified the levels above and below that inside day, above and below the channel that price has been in for the whole week, that if we break above or below those levels, it's a strong possibility that maybe the market wants to move in that direction. Okay, we know that lowest is right below price. We're going to look at that later on. Now, for our moving averages, to sum it all up, we can see that the majority of them, the Dow Jones, the Nasdaq, and the IWM, is very close to overhead resistance at a downward trending 50-day moving average. That's dangerous. You got to be careful. We are in a bear market, and we traded up to a downward trending 50-day moving average. We can get rejected right there. Okay, be careful on that. All right, be careful on that. All right, so that is a problem. And we find the support right at the 21-day moving average for most of the major, for all of them really. We find the support right at the 21-day moving average and the uptrending 9-day moving average. Well, that's good, but it's good that we find the support there because we haven't broken it yet. But it's bad that we find the resistance at an overhead downtrending 50-day moving average. We have inside days on all the major indexes. We have inside days on all of the major indexes. We had indecision for a week of indecision, sideways channel, a sideways movement for 5 days. We have to be careful. So keep your eye on these levels. This is part 1 of walking with the market. Stay tuned for part 2. We have to stay in tune with the market. You want to walk with the market. This is what you have to do every weekend, at least once a week, to stay with the market. Because if you can get the market direction right, then you're probably going to be right on almost everything that you do, okay? Because 75% of all stocks, 75% of all securities are going to follow the major market indexes. If they're going up, you got a 75% chance, if you're long, to being right. If they're going down, you got a 75% chance that most of the majority of all of the securities in these indexes are going to go down also. All right, so you want to be either short or sitting on the sideline. Why try to pick the little 25% of stocks or securities that might try to go up when everything else is going down? So if you can stay in step with the market, if you can walk with the market, then you got a really good chance of success. Stay with it. So this is part 1. Look out for part 2 of walking with the market.